Good morning, everyone, and welcome to the Mind Your Business Show. I am your host, Milt Walker, joined today by none other than Tony Calloway, the Private Money Godfather. How are you today, sir?
Maestro, man, I am fantastic. And it is such a beautiful day out here today, folks. I don't know
It
where you
is.
are in the country, but right here in Columbus, Georgia, woo, boy, it is absolutely clear skies, a little crispness in the
Yes.
air. And, it's just with the sunlight, everything's looking, it's absolutely beautiful. I was coming out of our subdivision and one of our neighbor, well, not neighbor, but on the street, as soon as I turned out, they had just got the lawn cut and they got some Cherokee roses. And I don't know who,
Oh,
that's the
nice.
Georgia state flower, but, and they were just looking so magnificent. I want to stop and take a picture of it. It was, but it's just that kind of morning. It's beautiful. And I
It
hope it's
is.
beautiful wherever you are. And we want to thank you for tuning in to the Mind Your Business Show, the show that helps you to grow. And before we get into our topic today, which is 10 emerging real estate trends in 2021, I got to ask my partner, the man who makes it happen, the techno wizard himself, none other than the guy I call the maestro. How you doing this morning, man?
Hey, brother. Hey, I'm doing very well. I'm grateful. I'm joyful to be here, and it's just always an honor and a pleasure to be doing this video with you, to be doing this show. And I'm just, a lot of times I think about it and how long we've been going with this, and just it's just amazing at the journey that we've taken. So
Indeed.
it's a great thing, man. Yeah.
Well, it is great to have your brilliant smile here to light up the screen for everybody. And we're going to light you guys up with some information. And I do want to remind everybody who has not yet joined the 10,000 Dreams Challenge that you need to go to privatemoneysyndicate.com, and that very second item on the menu, go in there and get your information in. And not only that, but when you get your email, please share this with other people, because our vision, our intention, our effort is focused on having 10,000 entrepreneurs and real estate investors to position themselves to where they make either $100,000 over the next 12 to 18 months or an additional $100,000 over the next 12 to 18 months. And that could be you. Now, in addition to what we're doing in terms of helping to close the information resource and mentorship gap, that is the biggest issue, or are the biggest issues that keep people from achieving their success. We got a bunch of cool things we're going to be giving away, opportunities to have you profiled on the show. So please, not only you, but tell all, I mean, 10,000, still there's room at the table, Maestro. There's room at the table for everybody. But
Always.
if you slow, you blow. You know what I'm saying?
Yeah.
So y'all get with and go on to the privatemoneysyndicate.com and enroll in the 10,000 Dreams Challenge. I want to see your name and I want to have your face on the show. Just like Miss Gibson and Bobby Jean, if you listen this morning, we want to say we're so proud of you. We cannot stand it. This is absolutely awesome. Well, folks, our topic for today, and it's been a while since we've had an episode that really focused in on our friends in the real estate sector. And as far as the private money syndicates funding, is the real estate realm is the largest one. That's where most of the money goes because, as you can imagine, transactions are pretty sizable. But there are some things that I want to draw everybody's attention to, whether you're currently in the real estate space or you're thinking about it or somewhere on the fringe. We started, matter of fact, it was a year ago for this, the Flip Money Not Houses coaching program. And we've had some of the participants to do very well. And we've had some that, old bell curve, I don't care what you do. Some folks just, well, they just don't, I don't know what to say for them. So you take a horse to water, but you can't make the horse drink. So in any case, we want everybody who has a desire to really develop wealth in the real estate space to know what's coming. I mean, history is phenomenal. We all can grow from knowledge, but being able to see over the horizon is what I want to bring you today. And so we're going to be talking about the 10 emerging real estate trends in 2021. But Maestro, before we get started, if we have any folks who've tuned in, I'd like to acknowledge their presence and say good morning to them. So we got anybody out there we can speak to?
Yeah, let's say good morning to Charles Bowie. Says good morning and blessings to you all at Private Money Syndicate. Appreciate you, brother, for always joining. and your support. Ebony is joining us again, one
Good
of our,
morning.
uh, you
Top
know,
fans.
yeah, one of our milestone commenters. Ebony says, "Good morning, gentlemen. Good morning to you too." And yeah, so right now, everybody's still waking up, getting the coal out their eyes, as they say, as in the country. But
Hey,
definitely, we're here for them, and we appreciate
well,
all the support.
hey, I appreciate you, Ebony, and I appreciate you, Charles. Y'all are with us every Saturday morning. And appreciate your comments. And back when I had my other business, we'd have training on Saturday mornings, and folks would get there late. I tell them, "You missed $1 million minute." They said, "What's the $1 million minute?" I said, "That's that minute that you just missed." So you guys were here from the very start, and you've been getting, and you will get all of it. So let me ask Maestro before I start talking about this stuff. Can you see my screen? Is it up?
Yeah, yeah, we
All
see
right,
it.
fantastic.
Yeah.
Hey, folks, I'm starting to get the hang of this without fumbling with it. All right, so all right, so we're going to talk about the top real estate trends of 2021, and this article is from an organization, as you can see right here. If you can see, it says Roofstock, and what we're going to do is Maestro is going to post this in the chat. Now, it's the text. I'm not going to be reading it to you. I'm going to just use this to illustrate and hit the high points. All right, so let's talk about the first of these 10 emerging real estate trends that have developed in 2021. This is the year, I'll call it the year of the recovery from the pandemic, because as we all know, folks are starting to get out and about and do things with the respect and regard for their safety. Many people have gotten the vaccines, and then of course, a lot of precautions, Maestro, have been built into. For example, you go into stores and they've got the plexiglass shields up, and
Yeah.
I hadn't flown but once. It was kind of the middle of the pandemic, but they do things like keep your mask on the whole flight and all that stuff. So my point is that life is trying to return to the new normal. I just put it this way, and a lot of things that have happened in the economy have had impacts in the real estate space. Some things have benefited, some things have been damaged in some regard, and then some things have shifted. So we want you guys to pay attention, because the industry that has created the most fortunes historically has been people investing in real estate. So we're here to invite all of you to get involved with the 10,000 Dreams Challenge, where you're going to really get a lot of stuff poured on you if you're looking to go into the real estate space. So the first of those is most important issues for real estate markets: job growth, pandemic, construction, labor cost. All right, so the gist of this paragraph here is that because of the pandemic, the general shock to the economy sent ripples that, along with it, affecting so many other things that affect the real estate. Because think of it this way: almost everything you do somewhere. Okay, so whether it's living in your home, shopping in a store, or anything that you may have had delivered to you from Amazon was in some series of warehouses, perhaps all the way from where it started to arrive to you. All these things were affected by the pandemic. So from this key thing here, it talks about job growth. Now remember, when the pandemic started in 2020, a lot of people left the job market or were not able to go to work because of that. Now, as a result, when they count the employment data, then that's provided by the Department of Labor, you start measuring where people are coming back to work. Now, I'm sure, Maestro, you see all the help wanted signs now, hiring and all
Yeah.
those things out there. But the fact remains that people are working, and they're working differently. And some people are working from home now, and some people have just not returned to the workforce. Now, in terms of construction, I don't know if you guys go to the grocery store. I don't know if you guys pull up to the gas pump, but the fact remains that cost of just about everything has grown significantly. And in fact, the cost is this article down here, and you probably won't see it, but it says the price of lumber, as one example, rose by more than a third. Now, lumber is one of the key building materials involved in just about everything, specifically in single family homes. So, from the standpoint of the cost increasing, it is certainly, those things tend to slow down demand. All right, this is a little mini economics class. So when you have an increase in price, it could be caused by two things. Sometimes it's an increase in price because demand has grown, pushing the price up. But in this case, the price has gone up because there's a shortage, so there's less supply. And so even within the same demand, you see this price increase, which further tends to suppress demand. So what does that say to you as a person who may be interested or looking to invest in real estate? Well, fundamentally, if they're not building any new stuff, and we'll see this as we go down a little bit further, that means that generally speaking, the price of existing homes, the price of existing properties in certain areas, because it doesn't apply to all, is going to grow or go up because there is not any new inventory being put into the marketplace. So this first item that, or this first trend that we're talking about relates to the effect that the pandemic had on the cost of everything, as well as how real estate is such a core part of our economy. So Maestro, I'd asked you before we came on the show, had you taken a chance to look at any of this stuff? But let me ask, in terms of what I just said to I'll call you a lay person.
Yeah.
I'm a lay person when it comes to technology. I'll say that you
Right.
are
Right.
a
Absolutely.
lay person when it comes
Absolutely.
to real estate. What does this mean to you? What are your thoughts as you hear this?
Well, it's interesting because again, if I look at it, I could put on two different minds for that. So if I'm looking at it as somebody who's looking to get into real estate, then I'm looking at it like it's a potential opportunity, right? It's an
Okay,
opportunity because if I
indeed.
get into it, then that means I'll probably, especially if I'm able to get something at a lower price than the average, then I'm typically gonna make more money if I sell it or flip it or whatever the case may be when it comes to those types of strategies. But just in general, if I'm looking at it as a person who's out here in the market just looking to buy my first home, then I'm going to be a little concerned because I see the prices going up and I see that it's because of supply. So
Mhm.
now I'm thinking, okay, so when is this shortage going to be over, right? So now and I think it translates into the markets because I know a little bit about the markets, but as fear of the futures, right? So now
Right.
you don't really know what the future is going to be, so therefore a lot of people kind of they hesitate on different opportunities or they draw out completely, so that's yeah.
Okay. All right. Well, I appreciate that, and you're absolutely correct. I mean, because there's a saying that we've all heard that some people see the glass half empty,
Right.
and some people see the glass half full. The fact of the matter is, there's a glass and it's got something in it. So you got to be intelligent about examining and creating your. And so it's not a reflex, but I always say, and again, y'all probably heard me say I was an intelligence officer in the military. My whole job was to create. It was to remove uncertainty and ambiguity from the combat situation by providing information that the combat commander could take action with. So this morning, you get an intel briefing, in a
Right.
sense, as we look at real estate, so that we can take out the uncertainty and ambiguity, and you can, as the commander of your own wealth development, take the appropriate actions. All right. Now, second one is that, and we all know this, that COVID accelerated the development of public open spaces and decline of storefront retail. Now, I did my first online shopping this year, just like I just did my first PowerPoints this year. So I'm actually proud to say that I ordered some stuff off of Amazon. Now, whenever I go visit my daughter and son-in-law and the grandkids, I mean, literally, we go up there maybe every few weeks, and invariably there's a box that comes in because they order just about everything from Amazon. And so the fact of the matter is that if you see this says that Ernst and Young Global Limited found 33% of consumers anticipate shifting more to online shopping. So now what does that mean? It means that if they're not going to the store, that takes away the foot traffic, that takes away the revenue, and that takes away the profitability, and it reduces the need, demand, and value of retail real estate space. And I don't know about you, Maestro, but I've seen a lot of stores that aren't there anymore. I've seen a number of restaurants that just aren't there anymore. And even though it says right here, it says restaurants setting up outside seating, along with the surge of discussion around the demand for more open space, or driving infrastructure projects that will answer the need from coast to coast. And I've seen that. And so we're talking about trends. So from the standpoint, restaurants that are remaining open that have their, I'll call it storefront location. I have seen them develop more outside seating. And why is that? Because one of the things they say in terms of staying COVID safe is 6 feet apart, and you're less likely to be able to be affected, or I guess get infected. That's what I was trying to think. Infected by the virus, because when the rays of the sun hit it, if it's exhaled or coughed out or whatever, it kills it. Okay, so those things are results of the pandemic, that we're having less retail space, which means the value is going down for retail space because there's less demand. But what's in demand is outdoor space. And in fact, I saw something on, I don't know if it was Dateline or something like that, was saying that, the national parks are like getting overcrowded now because people are going there to visit and vacation so they can be in the great outdoors. But that too is the result of the COVID-19 pandemic. So, what's the insight for you as investors? Well, probably is either one or two things. If you're looking to rent storefront space, it's probably a lot cheaper for sure. But if you're looking to invest in real estate, one of the areas that is seeing negative returns is in retail. Now, here's the thing about, I always say the pendulum always swings, and of course, the pendulum's going to swing back. Now, this is contrary to human nature, but we've all heard, and Milk, you tell me if it's not true. We've all heard buy low, sell high, right? Okay. Well, now, as I'm telling you this, most people say, "Oh, it's going down." But this might be the time to buy. Now, when we look at long-term trends, I don't think that people are going to start doing less online shopping. But one thing about real estate is local. Okay, something is in a place is in a place. So if your locality or your use is going to be benefited by virtue of your specific location, then this might be the time to buy. So, from the standpoint that you have to really look at the details in your own personal context to really be able to get make the appropriate decision for you.
Right.
But what I'm saying to you is the trend is there's going to be less demand for storefront real estate because more and more people are shopping online, not just for general goods and services, but they're able to order groceries and things like that. So I noticed one other thing, and this is a personal observation, because there's a Chick-fil-A here in Columbus that they are increasing the drive-through lanes to grow around because more people don't want to get out of their cars, and they're going to drive through and pick things up. So just like being able to have your groceries and stuff brought out to the car, it reduces demand for space for people to actually draw things off the shelf, and it also becomes more of a warehouse function. So that's our second trend. And I would like to know, especially for you folks who are out there in the audience, if there are any questions that you have about real estate uh, as we go through this, please put those in chat so that we can address those as part of the discussion this morning.
And
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 so,
you being the professor, you can correct me if I'm wrong, but if I remember my economics class correctly, right?
okay,
So when the price is driven up because of supply shortage, when the supply shortage is over, then the cost goes back down, right?
that is
And
correct.
so, but the demand goes back up. So that's a relational, and it causes, I forgot what it's called, but it causes like a relationship between those.
Equilibrium.
Yeah. So and there's a point in there where you want to be, right? Where you
Exactly.
want to be because it's a very profitable place to be in those terms. So
Yeah.
yeah.
I would have to give you an A on that homework assignment there, Maestro.
Okay.
Uh, but
My
yeah,
mind serves me okay then.
well, as he just articulated, things seek to return to equilibrium, but equilibrium gets disrupted when you have a shock. For example, he just gave the example, because the cost goes up, the demand goes down. But now, as the demand goes down, then obviously it starts to mute
Right.
the price. In it tends to encourage the producer to want to lower the price. So that people come back into the market. So when that X, if you can see, because I
Right.
can't see myself on the
Exactly.
screen, that X is equilibrium. So right now, what I'm saying to you is, as we look at this and the trend, now the macro trend is that people's behaviors are changing. And ultimately, even though most people think economics is about numbers, it's really about
Right.
measurement of human behavior as it relates to the
Right.
demand for goods
Right.
and services.
Exactly.
So with that being said, right now people are still buying, but they're buying through other means, not going to storefronts. So in general, if you're holding storefront investment, then the long-term trend tends to say that, yeah, it's not going to be the best place, because you got other places you could take that capital and deploy it, so that you don't have what they call opportunity cost, negative impact. But like I said, if somebody's in a good spot for retail space, that they want to open up a business, or if they want to own that piece of rent, that retail space for those reasons, then this could be a good time to buy. Because again, at some point demand may
Exactly.
increase in your specific location,
Right.
where that might not be the general trend across the nation or what have you. So I hope that makes sense. And so, Maestro, we
Yeah.
have anybody else we can acknowledge this morning before I go on to number three?
Yeah, so Alicia Brooks came in this morning and
Hey,
gave
good
a
morning.
couple of shout outs to a couple people, told them to come in and check out the show.
Appreciate
And
that, Eric.
and Horace Solomon is joining us saying good morning, brother. How are you? Uh,
Homeboy.
Char- yeah, Charles Bowie says, as I monitor housing prices, I see the trend in demand and higher prices for homes that has changed from a year ago. So he's just echoing what you said. Yeah, you can see it if you just go out. If you go out there and you look into the markets, you'll see those trends and you'll see
Mhm.
what's happening. But it's nothing that hasn't happened before, of course. And so
Right.
it's one of those things that you can kind of follow the pattern. Um, and we all know that this is not going to last forever. So it's one of those things where it's like, okay, as you start to see things start to come back, or even as you put it, Tony, as things start to transition right into a
Mhm.
different way of doing things, that can be translated into an opportunity. So yeah.
Oh, absolutely. Now, this third one goes right along what you were just saying, and some of these things blend into each other. Here, suburban migration is growing and will likely increase. Now, a suburb is an area outside of a city center, and this very first sentence already says city residents started heading for the suburbs to work remotely when the pandemic hit, and they are continuing to do so. So now, the key thing is that we've certainly seen I'll call it an echo, or a reverberation, where cities, I'll say in the late 70s and 80s, because of increased transportation routes and things, the inner city started really getting blighted in a lot of metro areas, because people moved out to the surrounding countryside. All right. But then, because the cost of living inside the city started going down, and as traffic started getting more and more dense, then people started moving back into the city to be closer to work. All right, so that was the pendulum. Remember, I used that analogy. All right, so now we're starting to see, because of COVID, people kind of got flushed back to the house. I'll just put it that way. My son's an example. He was working in New York City, and so his offices, they closed up. They say scatter to the winds, because they could work
Yeah.
remotely. And
Right.
so he's lived in Atlanta. He's back home with us right now. And he doesn't expect that they're going to be opening the office back up in Manhattan until uh, sometime early next year. I guess he's expecting January. But so we've seen this now. Remember, because a lot of people are working remotely, that office that they were in, folks don't have to pay rent for it. They don't have to keep the utilities on and all these other kind of things. Now, they might still have a lease. In some cases, they got a service, but the fact of the matter is, they also had to build infrastructure to be able to operate remotely. So why go back to create all that overhead? So my point is this: if you are a person investing in single family houses, think about these suburban areas, because that's where the demand is going to likely continue to increase because of the effects of COVID. So this is our third point. You got to look at migration patterns. And so depending on where you live, and matter of fact, Horace, you're there in Crawford County. Hey, maybe some folks will be migrating out of Macon to Roberta. Who knows? Now we were talking when we had Martha
Yeah,
Joe
it's
McAfee, who was
true.
running for mayor there, and Roberta, getting more broadband internet. But some of these things, again, our policymakers, people in government are recognizing and looking at to create greater opportunities in these rural and even suburban areas because now they know because of there being more demand for uh, internet infrastructure because people are working there now. They're working from their homes. That they need to, make investments, and it's what they call public-private partnerships to actually increase that. But once you lay that infrastructure, it's kind of hard to go back to doing things the old ways. So again, this is helping you to target the areas if you're an investor where you maybe want to place your bets and make
Yeah.
those bets in the suburbs because that's where the demand is because that's where the people are going. All right, so that's number 3. So let's go on to number 4 because I'm seeing our time is ticking away. Kind of touched on this a little bit. Government sponsored enterprises bring the capital for real estate institutions. All right. So now the government is the largest spender because they get all of our tax dollars. And so when we start looking at some of the things that the government is involved with, I'll just read this because it summarizes very well. Government stimulus for coronavirus related economic recovery is helping boost the real estate sector and real estate investment trust. Funding helps tenants stay current with rent, allowing landlords to pay their mortgages, property taxes, and other expenses. Other government funding has gone directly to landlords and small businesses, also benefiting real estate investment. Now, in the midst of the darkness, the government, with the stimulus checks that we have all received and the PPP loans, which I can't remember exactly what PPP stands for right now, and the EIDL, which is
Paycheck protection program.
Paycheck Protection Program, which went to businesses to help meet payroll, and the EIDL, which Maestro maybe you can remind me what that stands for, which was another loan program that businesses could use to maintain their operations. A lot of landlords, and I am one, unfortunately, none of my tenants, matter of fact, all my tenants are on not Section 8, on Social Security. They didn't have any disruption to their income, but as a lot of people are not able to go to work, to keep the whole economy from collapsing, our government provided all these different stimulus programs. Now, please recognize that the government taxes our income, the state taxes our income, but most localities collect their income from property taxes, but the biggest part comes from sales taxes. And so to keep municipalities from going bankrupt and broke, this stimulus allowed people to keep spending. And Maestro, you can comment just on your own, but I mean, I saw them on new cars. The people that benefited the most were the car dealers, seemingly to me. Okay, but people getting stimulus checks, and somehow, we all made it through the worst of it, and now we're kind of coming back out on the other side. But
Right.
yes, thanks to the government, most people who held income property, be that income property residential or it being retail, they were able to sustain because of these stimulus programs. So, any comment from you, Maestro?
Yeah, yeah. I mean, and I think it's always good, and that EIDL is economic injury disaster
There we
loan.
go. Thank you, sir.
Um, and but yeah, so when it comes to like I mean the stimulus money was a good idea. We pay the taxes. Of course, it went back to the people to help the people through this time, and that was a good plan. That was a great decision. And as you can see, it helped a lot of people make it through those tough times and then come out on the other side. But it also gave people an opportunity to really reflect on what they wanted to do, which is very important to what we're doing right now, which is the 10,000 Dreams Challenge, right? Because a lot of
Exactly.
people realized, okay, well, yeah, I'm working to pay my bills and do what I got to do, but I have an idea and I have a greater purpose that I want to do and I want to be a part of. So I want to do that as well. So that's what it also gave people the opportunity to do that. So I think that's a very important part of what happened and how we choose to perceive those times, because it wasn't just about the money. It's
Right.
about, people. It's about keeping what makes this world so great anyway, going, which is the people.
Right.
That's what it's all about. So yeah.
Okay. Well, here's our next one. The effect of COVID-19, the effects of COVID-19 are exacerbating the affordable housing crisis. Now, there has been an affordable housing crisis in America for a long, long time. And just to kind of paraphrase some point within there, rents are going up because there is more demand than there is supply. So again, back to that economics point, and it's expected that rents are going to go. They went up 7%, and they're expected to continue to rise. Now, generally speaking, as a landlord, when you're evaluating someone for tenancy, it's a rule of thumb that you don't want their rent to be more than a third or 30% of their net income, because
Right.
obviously they got other stuff that they need to spend money on. So some of that,
Right.
vetting prospective tenants comes down to, those who have more income certainly have more options. But because our wages have been so suppressed for so long, and I'm a big advocate and believer in increasing the minimum wage, and this is just a little plug. I was telling one of our well, a congressman whose district is here in includes Muskogee County. I was saying that corporations, and I'm a business person, so if any business people hear this, you might get mad, but the government's been subsidizing corporations because they've been the profits. If you watch Wall Street, have been going up, 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 and up, but yet and
Mhm.
still, because people have not been able to afford housing and food, we have all the government programs that help people survive. And I was like, either give them the choice, either you increase wages, because see, those increased wages ripple through the state and local economies, or increase taxes. Okay, so anyway, that's off the beaten path. But here's the point: with all the things we've kind of talked about before is related to slowing the demand for housing, the increased cost of housing or for construction, then as you have people's incomes suppressed to the point that they can't afford to go anywhere or rent. What does that mean for you as a landlord? Well, it means that you can probably raise rents. Now, for those of you who own property, every once in a while I go on Zillow and see what my properties could rent for, and it's amazing to me. And I have leases, and I do know that most of those are going to see some increase. But that's kind of one of the benefits of real estate. You do have some control over your revenue, unlike most businesses where it's kind of left up to the consumer. And because the tenant, the renter, is kind of boxed in. Where am I? If not here, then where am I going to go? Because most any and everything is rising. So the benefit of the current pandemic has been if people were getting their stimulus checks and able to continue to pay rent. If you were a landlord and able to and chose to take advantage of some of those programs, which personally I did, the EIDL or the PPP, you were going to basically be guaranteed your revenue. All right. But because of increased demand and reducing supply, at least in the short term, there is a trend, and this is what we're talking about this morning: 10 emerging real estate trends. The trend is that rents are rising, which means more real income. Now, in most businesses, you see a commensurate increase in costs that is called inflation that goes along with the increase in income. But think about it, folks. If you have not yet invested in real estate, and I'm talking to those folks, once you get a 30-year mortgage on a property, that cost is not going to go up. Now, the taxes may change, the insurance premiums might change, but those are modest. But the biggest input to your business model, which is the cost of capital to buy the property, that doesn't change for 30 years. And guess what, Maestro? We're in the lowest interest rate environment in general that we've been in decades, okay, as far as investing in long-term capital access. So I'm just telling everybody with this one right here that if you have not thought about it, again, I want to say join the 10,000 Dreams Challenge. Go there, put your name, first name, last name, email address, and tell us your dream, which I'm sure will relate to real estate. And let me talk to you about how we can put together a plan to get you into the real estate game in the right way so that you can take advantage of these low interest rates and this trend in terms of increasing rents. So, again, if you're a tenant, then I know this doesn't sound good. And again, I always tell people I can't make sour taste sweet, but I can make you aware. And so this will probably also be a good time for people who can get themselves positioned to qualify to buy a home. This is the time to do it because again, interest rates are low. But I do hope the wages go up so that we allow more people to enjoy the benefits of not only buying, but then help them to be able to afford good quality tenancy as far as where they live. All right, I want to go on to one more before we take a pause for the cause here. Let's talk about markets where people are moving to. And it says Raleigh, Durham, and Austin, Texas are two real estate markets to watch. And so with this one, I I jokingly say that they need to put some signs up on all the interstate accesses to Atlanta and just say we full, okay? Yeah, stop in Charlotte, Birmingham, I guess really, because if anybody else moves into Metro Atlanta, my God, man, it's it's getting crazy. But here it says that the very last sentence says housing prices are up some 42% from where they were a year ago, according to local realtors. Now, here's my point. If you bought in those markets, especially single family residential houses, your your property values are driven by the comparable sales is what they call it. So even if you're buying it to rent it, the value of it goes up. Now when the value goes up, that creates two opportunities. One is you can sell it and reap they call it a liquidity event. You reap that cash and now you got to find something else to do with it. But what some people choose to do, and we call this a cash out refinance, cash out refi. And because the value has gone up, and I was encouraging clients over the past year or two, hey, look, you just got given a gift. So let's say the house went up $50,000 in value. Okay, I mean 42%, almost half an increase in value. If because at some point that pendulum is going to swing back, you can do a cash out refinance, generally 75% of the value, and take some of that profit off the table. And it's not taxable because it's not income, and you can redeploy it, and you may be able to get a lower interest rate now than when you first bought the property, which means you can improve your cash flow because your debt service goes down. Now I know that was a mouthful, but all I'm saying is this is a trend. This is a typification because again, people move into what they call tier two cities, smaller cities, move into the suburbs, which is pushing up value. So inside of your investments, your current investments, there may be opportunities to profit in two ways. One, cash out refinance or sell. I would definitely encourage the cash out refi because you lower the mortgage payments possibly in your case, but the income that you can get from a cash out refinance is totally tax free. Whereas if you sell at a profit, that's a capital gain, which is taxable. So again, this is an important trend to examine here in the real estate space with Raleigh, Durham, and Austin being examples. So Maestro, we have anybody we need to acknowledge making shout outs to or any questions that have come in since
No.
I've been on a roll here.
No, nothing's come in just yet. Everybody's just still watching, so they're interested in this information, and I think it's very important. But to your point, yeah, I think the goal for every renter should be to own their own home. There was a time where that was the case, where every time that was the quote unquote American dream, right? Where you wanted to own your own little plot, with the picket fence and with the dog running around, all that good stuff. But even if that's not your idea of heaven, definitely owning your own property is a reward within itself because again, like like you said, you get locked into certain interest rates or whatever the
Right.
case may be. You also have the liquidity of taking money out of it as it matures and so on and so forth. So I mean, you got all of these benefits of owning versus renting anyway, right?
Right.
So that's how people can kind of balance that in itself, and yeah, so that's pretty much my thoughts on that. But
All right. Thank you, sir. And even though I'm speaking to real estate investors, Maestro, you brought up a good point. If you can position yourself to buy, this is the time to buy. Now, even though we're saying the costs are going up and so on and so forth, the cool and unique thing about real estate is the value of something does not directly correspond to what we experience as costs, because what we, as the person paying a mortgage, experience is just that monthly payment. And because interest rates are so low now, that payment is reduced, which means the more people, which kind of goes back to the demand side, more people can afford to buy more house. But the key thing is that can help you to afford to buy a house. So maybe you had looked at it before, maybe your income hadn't changed, but go back and look because interest rates have gone down, which means the payment as a function of your income could be lowered, and that could open a window of opportunity for you. All right, now here it says investment prospects are highest. Notice it said investment prospects are highest for industrial distribution and single family homes. Now, I made the comment a bit earlier about the fact that more stuff is getting shipped, drop shipped, delivered, and all that. And those things happen at warehouses. Okay. And I mean, I say that Amazon has probably more trucks on the road. I've gotten, I'd say 12 to 15 clients who've gotten contracts and bought, trucks and so forth to start driving delivery, long haul and local delivery for Amazon. And that's just Amazon. But the fact of the matter is all kind of things are now being shipped and delivered. So that's where that industrial and warehouse distribution point demand. So some of the areas where there may have been abandoned warehouses and things like that are now up and running. I've seen it here in Columbus, and Meister, you probably remember out on I guess is going out East Columbus on Manchester Expressway, that old Burnham. Uh, it used to be Burnham Delivery had their a big warehouse out. It was vacant for probably over a decade now. I see it's back alive and well. And so these kind of properties are benefiting from the increased demand because of e-commerce to have things shipped. Now, going back to what I just said in the previous, single family homes is a great place to invest, whether you're investing as a person buying to live there, which we can't finance that. We can only finance here on the Private Money Syndicate real estate investment properties because of the laws and regulations. However, same said for an investor. If you're looking for investment opportunities, lower mortgage payments mean more profit because rents are going up, and you probably see appreciation in your real estate. I know one of the houses I own locally, uh, because I bought it in 2007, 8 at the height. I bought it for 72, I believe. And according to Zillow, it's bobbed above 100 and down to like 95. And so, because of some of the activity in the area. And again, at $40,000, $30 to $40,000, let's say 25 to $30,000 of appreciation is all because of demand. All right. So those are the kind of things that can happen along with the fact that, again, the rents can increase. So that's another area to look at. So if you want to buy a warehouse, it probably would be a good investment. Seemingly related. I don't know how much different, but fulfillment, warehouses, and single family rental subsectors have the highest return on investment. All right. Now, this, you say, well, what is ROI? That stands for return on investment. And I'm just going to kind of go through this one real quick because it relates to the other one. Yes, is a great place to invest, but now return on investment means what am I making on it? Okay.
Right.
So now to get your return, you have to, there are two types of return. I want to just say this, and we might have another session on it. That's what they call a cash on cash return. All right. That's how much money you put in relative to what it has actually gone up by. Because remember, with real estate, most of it is funded with borrowed money. So if you look at your cash on cash returns, those are really, really attractive. And then if you look at total return, which is another factor, because oftentimes with rental real estate, whether it's these warehouses or a single family home, you do get cash flow. But now, if you calculate that cash flow along with the increase in value, which you may or may not have captured, because again, you don't capture that appreciation unless you do one of two things: cash out, refinance it because you got to turn it back to cash, or you sell the whole property, which what you sell it for over what you bought it for is part of that capital appreciation. So total return is netted appreciation along with the cash flow. All right. So again, I know that might be a bit technical, but here's the bottom line. In real estate investing, the ROIs are going crazy. As it says right here, it said, look, so the build to rent market is growing as well as about is growing as well. And it says about 12% of new construction of single family homes this year has been in this area of rentals. More houses are being built for people to rent than, yeah, well, at least it's up significantly, because there are these factors of getting the returns on investment, both the cash on cash return and because of the increasing appreciation and the lower debt service, which means more cash flow, your total returns are higher. Now, Maestro, did that make sense to you? Because I don't know if I confused or if I educated there.
No, it does. It does. It totally does. And again, I think, like you said, it's connected to the last topic, but the return on investment is what you really look at as an investor, because that's you're looking, especially if you're talking about long term investing, right? So
Mhm.
if you're talking about holding the property and not just selling it directly, then that's what you look at. You're looking at your return on your investment. So you're looking at,
Exactly.
because that's rental is talking about specifically for warehousing and rental type properties. So that's over a time period or over a term. So then you're looking at, okay, well, that growth is actually great right now. So it's a great time to become a real estate investor, to purchase properties for these reasons, So definitely,
Okay.
yeah, it makes
All right.
sense.
Thank you, sir. Now, here's another, I'll call it subset in the single family space, that residential investment prospects grew the most for vacation homes, high income single family homes. Now, in this particular case, we've all heard of Airbnb, and we had Robert Kohler on our show back in April or May. This guy's killing it with Airbnb right here in Columbus, Georgia, buying in regular old middle income neighborhoods. But again, these are what you might call spare houses, vacation homes. Now, some people, when you think of vacation homes, you think of coastal, you think of mountains, these scenic areas. But the fact of the matter is that it almost doesn't matter, because of the demand in the marketplace and because of platforms like Airbnb, which help to create, I guess, a centralized hub for what would otherwise be a fragmented market for people to actually have short term rentals by the day, by the week, or for holidays and so forth on single family homes. Now, here the other thing says high income single family homes. One of the trends that I've seen for quite some time, it didn't just start in the pandemic, but builders have been building bigger, more expensive homes. And I was talking to a guy who was telling me, to make a room 140 square feet bigger, basically you put one 12 by 8 piece of sheetrock on one side and one on the other, and it makes the room bigger, which people, even though all it cost was maybe a few $100s for the lumber, sheetrock, and so forth to make that room bigger, people want more space. And I often say, because HTV made you want more space, and they're willing to pay more for the houses, even though they're basically putting less money into something that has a greater appeal to be able to sell it at a higher price. But not to get into that, that's what the trend has been. And what that has created, relating back to one of the previous trends, is it reduces the inventory or the stock of affordable houses. Because the builders are saying, where can I make the money? I can make the money in building them bigger and fancier and price them higher than the lower, smaller homes. Now, something that may be a trend that, again, pendulum swinging back. I had a lady call me, and we're looking at getting some financing. She wants to build these, what do they call those, mini houses,
Yeah,
tiny house,
tiny house. Yeah.
tiny houses. And she's bought some land, and she wants to start building some tiny houses to put on there because, hey, like I said, affordability is becoming a factor. All right. And so that we don't run out of time, let me go and hit these last few here. All right. Single family and multifamily housing starts are expected to plateau, which means not increase until 2020. And I don't think I can say it any more concisely. It says housing starts are being held down in large part by the high cost of building materials and labor shortages. The prices for steel, lumber, concrete, and other materials are high. Also, builders are seeing extensive delays in delivery of goods like heating units and windows. Lumber prices could stay high due to wildfires this summer in the West, experts say. So again, all these inputs, with the materials, the labor, and all this are inputs to production in terms of building structures, whether they're single family or apartment buildings, multifamily. Because of these things, they don't see those changing for the rest of the year. And at some point in 2022, um, we're only going to see the expected value and prices to go up. So That is message to those of you who are in that space. If you get something now, the value is probably going to continue to go up for the short term at least. And from an income point of view, we're probably going to continue to see at least stable, if not growing, income from these types of properties. And I think that was the last one. Okay, super. All right, so we've covered all 10 of our trends for 2021. So, Maestro, I want to ask you, if nobody else has any comments or thoughts, because I'd like to acknowledge those if they have. I'm trying to run this back up to the top here. There we go. Uh, if you having heard this for the first time, seen this for the first time, give me 2 minutes of what are you thinking about doing as far as real estate? What does this make you think?
It makes again, it depends on what your play is. What is it that you're trying to do individually? But for me, it makes me want to purchase a home. It makes me want to purchase a home because I know that the rental costs are going to go up, right? And
Mhm.
from just that's just from a consumer standpoint, but of course, and that's always been the plan. It's always part of the plan. So again, you should always want to do that anyway. But as an investor, it definitely makes me want to get some more information and choose one of these fields where I can get the best return on my investment. And what better way to do that than to talk to some experts about that, right? And I just
Totally.
want to highlight Charles Boyd did say this is a lot of good, solid information. Mr. Tony is sharing. That's why I always try to tune in.
Thank you,
So
Joe.
just kind of echoing what I was just saying, this information is great because it helps you make informed business decisions and not just, go with what somebody says. You want to actually do your market research and everything. And again, when you have someone who's an expert in the field, I mean, why not?
Well, I
That's the
certainly
cheat
appreciate.
code right there. That's the hack.
Hey, well, that's why we do what we do, man. I certainly appreciate that. And Charles, thanks for that comment. And for whoever sees this, whether you're seeing it live now or you see it later on Facebook, and it'll be up on YouTube shortly. What we've been doing for quite some time now with a number of our clients is don't think about what you don't have. Okay. We encourage everybody, please, please, please get into the 10,000 Dreams Challenge. Go to privatemoneysyndicate.com. Second link on the menu is the 10,000 Dreams Challenge. Click that thing and get your first name, last name, your email address, and your dream, which again, we're talking about real estate today, in there so that we can start working with you because there's an information gap. We've given some great information this morning. There's a resource gap. So let me talk about that because we have dozens of clients that we have helped to get credit lines and loans to help supplement their cash, or some of them didn't have any cash
Right.
to use as down payment to invest in income producing real estate. Now, all I'm saying is the only barrier for most of you to getting into the real estate is maybe your credit score is not where it needs to be able to get a large enough loan to use for your investment. We can help you to fix that quick, fast, and in a hurry. Please understand, we make money by booking loans. We don't make money by credit repair. But if credit is going to allow you to have access to the capital to invest and start growing your wealth, then I have to tell you, and I got this saying, you be double dumb not to start moving in that direction. So I can only compel you with the voice and the face that I can put before you on the screen. Now is one of those unique opportunities in history. It might not come again in your lifetime. You might miss this $1 million minute. Okay. It might not come again in your lifetime. So wherever you are, whatever your condition right now, please get in touch with us and get, because there's some resources you're going to get in the 10,000 Dream Challenge you ain't going to get for free anywhere else. I'm just letting you know. So if you and all the folks you know and love don't get into that 10,000 Dreams Challenge, there's something wrong with you. Okay. So go to privatemoneysyndicate.com, go to the menu, second item, and get in, and then share this with everybody you know. Share this show when it comes up after we finish with all your folks you know on Facebook, and it'll be on YouTube. Hey, check it out there. But these trends, and again, these are trends. This is not a review of 2021. You understand, Maestro? This is where we see the
Right.
trajectory of things relating to real estate going over the next, I'd say, 5 years, maybe 4 years. But the key thing is get in now, because if you, and again, Maestro, if you hadn't done it yet, now is a good time for you to please put that link in there to this article. We want you to read it for yourself. Ruth Stock has done a great job of collapsing this into some easy, digestible information. And one thing that you'll see in there is they got links to all the references, and you can go read the details that they've used and summarized, that I've even further summarized with you guys this morning. But yeah, I mean, you can grow some tremendous wealth. In fact, our good friend Maurice Jones, the brother, I said blue collar millionaire, because he started and he's been working with me for, I guess, going on 4 years now, at least 3.5. And he has gone from 14 to 44 houses. Think about this now. This could be you. Maestro, think about this, man. It just struck me. You got 44 things that just went up in value, and all of them, the rents could go up, and the mortgage payments ain't changing. Now, if that isn't brilliant, what else could be? And I say you get your 5, start now to get 5 properties, and you could be set for life. In fact, we did a program months and months ago about a 3-year plan for $1 million wealth.
Yeah.
And if
Yeah.
you go to the Private Money Godfather page on YouTube, and that one's in there. I think it's titled The 3-Year Plan to $1 million in Wealth. So go to YouTube and check that one out. But all of it comes back to action, right? So join the 10,000 Dreams Challenge and let us help you to grow your wealth. All right, Maestro, anybody else we got to say hi to before we say bye to? And I've said about all I need to say today. So unless something comes back to me, as I always say, if you're going to go in business and stay in business, you got to mind your business. And today I'm going to add, if you're going to go into real estate and grow your wealth, you got to mind your business. So thanks for joining the Mind Your Business show this morning.
Right. I like that. And
And
no, that's it. Everybody's,
okay,
yeah,
I'm sorry.
yeah,
I was
everybody.
gonna let you take us on.
Yeah, everybody's they just digesting the information, and yes, that link is in the chat. So if you're watching this, live, or you're watching this later, it's going to be there, so you can go and follow all that information. And yes, definitely thank you all for your support. Make sure you like, follow, share, and definitely, join us in this 10,000 Dreams Challenge. This is that opportunity, that $1 million minute, as Tony says, that's going to definitely change your life. If nothing else, get you structured in a way where you can start, getting capital for your business, and that's what you want to do. You don't want to use your own money, right? You want to use, that capital.
OPM.
Yeah, you want to use that capital to grow your business, and fund your business. So definitely, thank you as always, Tony. Thank you all for joining us. Ebony says, have a great day, and thank you again. A lot of great information, and thank you all, and we'll see y'all on the next one. Take care.